right, guys, welcome back to the Independent Investor Channel. My name is Ryan. I'm going to hit you guys with 12 of the best dividend-paying value stocks that I see right now in the market. We've run up very quickly off the lows, but certainly some areas of the market, some pocket areas where I do feel like there's some value. This is really where the rubber meets the road. I'm going to throw these picks at you as quickly as I can. I'm going to come out with a separate video that really discusses what I look at. I use multiple platforms. I do review the cash flow, income statement, and balance sheets on each and every one of these stocks. And with a collection of information that I'll get from consensus, which means how the street is viewing each and every one of these stocks, we really don't want to discredit that. And then checking and cross-checking the dividend growth against Seeking Alpha. There's a few things that I look at on each one of those. And a lot of these companies you're going to be familiar with. So I think that's important when you're looking to build out your dividend stock portfolio. Now, please do keep in mind that you do need to do your own research on these, cover the same metrics, and make sure that you're comfortable with what you're looking at before you invest in these companies. Each one of these companies do pay a dividend, which is great. It's the center point of this video, trying to pick those dividend companies that may be technically or fundamentally in a spot where here we can start to build a base in each of them. The first is CVS, ticker symbol CVS, pays over a 3% dividend. It's a beast. It makes over $250 billion in revenues per year. Last in quarter one, $66.75 billion in revenue. We've got gross profits and net income up on both. It's got a very anemic payout ratio of 28%. Street's consensus on my review is across the board bullish. There's going to be a lot of these stocks that are going to fall under the same category, and it was buys across the board for CVS. I really had a hard time identifying any negative with CVS. And right here in the healthcare sector, their recent merger with Aetna is positive. And I've actually taken a nice position in CVS. So one you want to take a look at, guys. The next on the list, I just recently took another position in 15 share position. So rather large position in Lockheed Martin. The ticker symbol is LMT. Lockheed pays about a 2.5% dividend, trading at a fairly acceptable multiple of 16 times forward earnings. It's in the industrial sector, it's in the defense subsector, so think of Lockheed Martin as really the executor, the initiator, plan drafter for the U.S. government, and most importantly, the maintainer of a lot of the systems. Their business covers 4 different segments. I found it just intriguing to read about Lockheed Martin. And again, something that you're going to want to really relate with is before you put capital to work, you're really going to want to research these companies. The information is there, that of which I'm going to kind of highlight where my metrics come from in a follow-on video that you can take and deploy broadly when you're looking at covering the landscape. But in this video, I aim to deliver you guys 12 dividend-paying stocks that I see value in, and Lockheed Martin certainly is one of those. Next on the list is a crowd favorite of the dividend investing community. It's part of a sector right now that I think is probably on a secular shift up. I think it's really, really intriguing to be looking at healthcare right now. The big ones, Pfizer and Merck, I already own. Abbvie is the third on my list, ABBV. Abbvie pays a wonderful dividend, close to 6%, and it trades at a very reasonable valuation at about 15 times right here. It's kind of settling at 90. I do see the stock moving higher from these levels. So Abbvie is one of those that if you're looking for healthcare exposure, you can just go ahead and add that into the portfolio. Abbvie's dividend growth is off the charts. Fantastic company, and one that you should probably put in your watch list at least in healthcare. The next one is Raytheon Technologies, just recent merger with United Technologies, and also merged with Raytheon, which has been a company that I've invested in. So you're kind of getting the best of both worlds, aerospace and Raytheon, right, in their radar technology business, communication systems, also linking into those government contracts. Three of the names that I've got on my list here are really sector specific with regard to defense and the connection to the government and earning those contracts going forward, all right? So RTX, ticker symbol RTX, another great dividend payer, close to 3% anyway, and it'll be interesting to see how this company finds synergy between the two companies as they move forward and start to really realize those synergies and discover the value that they had and identified before the merger, all right? The next on the list here is Realty Income. It's in the real estate REIT sector of the S&P 500. So O is incredible. It's one of the few monthly dividend payers. It's the only monthly dividend payer on the list that I have. I watched Realty Income go into the 40s. So from a technical perspective, it was oversold there for a very, very short time. Here in the mid 50s, of course, very, very good entry point. Anything between 50 and 60 I find is attractive, and I don't think it's going to stay here for very long. Most of the folks that cover our community are very familiar with Realty Income. They're the ones basically that carry the leases for some of our major lessees in the country. So very, very important. And if you're looking for real estate exposure, O will get it done for you, all right? Next on the list with the theme of the defense sector is General Dynamics, ticker symbol GD. I've just recently purchased a new position in General Dynamics based on fundamentals and technicals, all right? I looked at fundamentals and technicals on all of these, but General Dynamics here at this entry at 140 really looks attractive. Again, with some of the defense systems, they're the ones that are building some of our military vehicles, submarine systems, and of the like, and really wanted to exploit based on valuation. GD trading at about 11 or 12 times earnings, wanted some more exposure to this company and got a really good entry here as it got beat up during the pandemic and it really hasn't recovered very well. So that's what's going to start to happen is some of these undervalued sectors are really going to start to pick up, and you're really going to want to be taking advantage of some of those opportunities for your entries into some of these stocks long term. The next on the list, I've just entered 115 share block of AT&T. A lot of you guys are familiar with AT&T in the telecom communications sector. So I really tried to cover the entire sector and really pick the best of breed. I do like Verizon as well in the space, and I'm a long-term holder of Disney. That's also a communication services company, but AT&T pays a higher than average dividend, very, very low price to earnings. Here in the 30s, it really is a nice entry. I think 28 is where the company found its support and bottomed, and now it's above 30 again, but I think it's a fairly attractive entry here for beginning investors to be able to pick up 10 shares at $300. It's wonderful to be able to grab this Dow component here at $30 a share. So that's what the point of this video is to get that dividend yield into the account at the best evaluation that we possibly can. Next is UPS, ticker symbol UPS. This is a company that I don't own right now, yields about 4%, but anything sub 100 is probably good. We had a brief entry in the 80s with UPS. That was a lucky and oversold entry. You're not going to get those but just for a few days, and that's exactly what happened. I think in the low 90s, UPS would have been good from a technical perspective. My hesitation for entering into UPS at this point is I already own its competitor, and that's Federal Express. But UPS is absolutely worth putting out there for the group to at least add to the watch list in the industrials sector. I really think they're going to benefit from the logistics piece coming out of the last 2 months. UPS has really been a silent champion here for moving logistics and material around that's been necessary to fight this pandemic over the last 2 months. So UPS, Great dividend payer, great long-term investment, ticker symbol UPS. The next three are going to be Dow components, and I'm going to lump them into kind of the same category. There are three stocks that I've talked about very often, but for you value investors out there that are looking to portfolio build, okay? You've got your portfolio and you're looking for those strategic cornerstones within the portfolio. I'm going to give you the three cornerstones right now before I address the very last stock pick in the group tonight. The first one is JNJ, ticker symbol JNJ. It's an absolute favorite of mine, probably the number one company on my list to own. It's one of those that I think that probably all investors should own if in fact you're looking to get single stock exposure in the portfolio. Balance sheet's phenomenal, cash flow phenomenal, dividend, yes, it checks all the boxes, very well run, and it's really going to be interesting to see J&J and their contribution as all the pharmaceutical companies get together to fight this pandemic. J&J operates in three different segments of the market, and it's very, very exciting to see diversified business, and I certainly would encourage all of you guys to look at J&J. I've owned it for years, and I'll continue to own it going forward for years. The second in the Dow components is McDonald's. Very, very simple. If you look at the charts on McDonald's, McDonald's is a buy right here, ticker symbol MCD, over a 3% dividend yielder. Not the greatest entry here because we have run so far off the bottom, so a lot of these stocks that really got depressed during the downturn got depressed with it. I just think now when we're looking at the dust settle, we're trying to pick out that value from the bottoms and see where we can go from here, and McDonald's is one of those that I think if you don't own it, right here might be worth looking at for MCD. And the last of the Dow components is going to be a crowd favorite, a Buffett favorite, Coca-Cola, ticker symbol KO, performed really, really well down through this pandemic and got a recessed stock price out of the deal. Yields about 3.5%. Ticker symbol is KO on Coca-Cola. So if you don't have a small exposure to Coke, 10 shares will run you $400. Cut that in half. Start a 5-share block at $200, right? Become a shareholder in one of the best companies, Dividend King. So it really doesn't get any better as far as value dividend investing than Coca-Cola. Very easy stock to be an investor in, and I liked what I saw when I looked at the technicals, especially. The balance sheet, very good. They run their business to be conducive to the dividend that they pay shareholders and have paid for over the last few decades. The last on the list here, number 12, is ticker symbol PM. And Philip Morris earns 100% of their revenue outside of the U.S. Philip Morris split off of Altria. There was some slight grumblings about them coming back together. I don't think that that will happen, but Philip Morris was an interesting one. Philip Morris pays around a 6% dividend. So for your aristocrats that are looking for almost as good of an entry, the technicals are screaming buy right now. I had way too many technical indicators to provide on a short video like this, but Philip Morris is really one of those to be looked at here. An interesting thing that I did see on Philip Morris that may be troubling and you may want to look at yourself, its payout ratio is extremely high, which may be enough. I don't own the stock, and I've owned it before, and I've always made good money with Philip Morris. But I think the way to play Philip Morris is to buy it and hold it forever, take advantage of that dividend. It's been historically up around that high level, and it's been as close to that 100% payout ratio a couple times. It's at 95 right now, but the cash flow, the balance sheet, everything is very, very clean with Philip Morris. Their cash flow that they're rendering quarter over quarter is about $300 million. So not really that much for a $75 billion company, but nonetheless, the street is extremely bullish on Philip Morris. I do have my reservations. That's why I saved this one for last. It could be controversial for a lot of people to invest in, but it absolutely checked a lot of boxes for making this top 12 when we're looking at value in the market. And Philip Morris in the low 70s right here is a screaming buy, so it made the list. Guys, thank you so much for tuning into the video. Really appreciate your time. You want to subscribe to the channel, leave your comments at the bottom of the video, and share the message with anybody out there that you know needs some preliminary information on how I go about deliberating on my stock picks. They'll find real value in how I comb over and look at the different metrics that I look at least from an awareness standpoint. You've got an idea about what I'm looking at investing and what I see as far as value in this current market. Guys, thank you so much for tuning into the video, and good luck in your investment future.